Welcome back. As we have shown you, U.S. markets are higher in what will be a shortened trading week this week, with the Thanksgiving holiday happening on Thursday of this week. Let's talk about U.S. markets with Aaron Dunn. He's portfolio manager of the Eaton Vance Large Cap Value Fund and co-head of Value Equity at Morgan Stanley Investment Management. Aaron, thanks a lot for joining us. You have noted that and you and your colleagues had forecast a rotation into other sectors beyond mega cap tech, and that has happened recently with investor dollars flowing to utilities, financials, and industrials. Do you see this trend continuing?
We do. We certainly do. I think earlier this year and last year was this year of discovery of some of the AI-related trades, the mega cap tech, an uncertain market environment, by the way, that was really predicated on whether the Fed was going to cut rates or not. And so we bounced around that for most of the year. And what that led to was a narrowing of the market into the big mega cap techs that have excellent balance sheets and almost act as staple type stocks in many ways. We expected that as the year progressed that you're going to start to see the market really diversify into other sectors because we saw a lot of value in other areas of the market. And what we also believed was that there was going to be discovery that the AI, the data center trade had many sort of tentacles to it that took it outside of just 7 stocks. And we also think that's occurred as well.
One of the financials have perhaps enjoyed the biggest post-election rally. They famously now jumped up by about 10% apiece, the likes of JP Morgan, Goldman Sachs, Morgan Stanley, and so on. And for the most part, that rally has continued since that big jump up. What do you see ahead for the financial stocks?
Yeah, I think there are a couple of things. I mean, I think the regulatory side and the financials are set to be one of the more volatile sectors around the election. Trump, with winning the election, I think he got a big trade into financials that continues to this day. And I think the interesting pieces about this are expectations around financial markets. So your IPO calendar picks up going forward. You see a little more optimism on the economy, on the markets in general. So that looks like the banks are going to do very well on the investment banking side. I think there's also a lot of optimism around loan growth, right? So the reshoring impact, better economic growth could drive greater loan growth for the financial stocks, for the bank stocks. And I think you've seen both the capital markets and the sort of bigger financial names and regional banks all do quite well post the election. So that was something we expected were Trump to win. The outlook is going to be determined. I think there's also a lot of excitement around potential tax cuts. But what I saw over the weekend was a new Treasury Secretary who has a priority to extend the previous tax cuts, and we don't really think there's room today to further deepen those cuts. So we see an extension, maybe selective areas where tax cuts happen. That's also helped the financial stocks. So there's a lot of hope. There's a lot of optimism built into financial stocks given where valuations are today. I would say we're pretty balanced in our approach to financials today. We see the optimism, we appreciate it, but some things could turn the other way. So we are knowledgeable of that.
What are we seeing in U.S. utilities? Here in Canada, we've seen the utility stocks rally quite dramatically since about June or so. And that the catalyst appears to be investors coming to realize that the Bank of Canada was serious about taking interest rates down significantly. The first Bank of Canada rate cut in this cycle happened in early June. And it wasn't long after that the utilities, and we're looking at the utilities index on our screen right now, the Canadian Utilities Index, began to rally. What is the dynamic in the United States?
Yeah, and we've been actually excited about utilities going back to late last year. Last year was the worst relative performance for utilities relative to the market, I think, in nearly 40 years at least. So you were coming off a really very poor year for utilities. Two things were going to happen in 2024, and this is what got us excited. Eventually, rate cuts were going to happen, whether that was through sort of managing, the rate of inflation and maybe not recessionary based. That would be positive on the margin for utilities. And even if it was recessionary based and we did not have a soft landing, utilities would perform quite well on a relative basis and the ability to keep capital. But the other thing that really came into this through the early part of the year was the data center trade and the need for power. So you've had sort of a multifaceted tailwind for utilities utilities, it's interesting to see that rates have gone back up and utilities have held in quite well. There's a new set of investors in utilities. Everyone sees the need for greater utility demand. The growth rate of electricity demand in this country and in this, in North America is set to inflect substantially higher, whether it be any new Bitcoin regulation or data center. You need more power to do that. So there is an inflection in power demand coming. The big question there, though, is just rate of change and how big that's going to be, and that's what everyone's trying to determine. That said, you've seen a lot of interest in utilities on the back of this, and given the rate backdrop, were rates to go down from here, I think also bodes well for utilities.
Okay, we promised investors that we would get you to explain why you like UnitedHealth. So why don't we finish there? UnitedHealth as a stock you like?
Yeah, healthcare, just from a bigger picture perspective, has not done extremely well in this market in the past couple of years, frankly. Managed care has not done well. There's been a lot of crosswinds in managed care, whether it be, rate cuts coming from the Biden administration on Medicare Advantage, and whether it be a greater utilization of healthcare benefits by either a pent-up sort of COVID environment where people are catching up to their healthcare, but you've seen definitely higher utilization across the healthcare space. Those two dynamics really drove massive volatility across managed care. With the Trump administration coming in, he was very favorable to Medicare rate development in past years. So we think the books of the managed care companies are getting priced correctly. You have favorable development on sort of the next administration coming in from a rate perspective. And also you've had a lot of interesting dynamics around what they call the STAR system for Medicare Advantage. And that is you had some managed care companies downgraded and their reimbursements were going to be cut. United actually won a court case over the weekend quickly to get their STARs reinstated. So we think that's all very positive for managed care. It's United's a company that is very diversified. They've grown earnings high single digit, low double digit for years, yet their stock has really traded sideways, so you have a compression in valuation. We think it's very interesting space to invest today.
Aaron, thank you very much for a good conversation. Aaron Dunn is portfolio manager of the Eaton Vance Large Cap Value Fund and co-head of value equity at Morgan Stanley Investment Management. Coming up, Barrick Gold shares are down. We'll tell you about some changes by analysts in our notable calls segment right after this.